Okay, it's happened. The Bitcoin price just smashed through $61,000. If you're holding any crypto right now, I know your portfolio is bleeding. And you're probably asking yourself just one question. Is this it? Is this the big one?
I mean, it has been a brutal 4 months of just free fall. The price has been cut by more than half from its all-time high of $126,000. All that euphoria we felt just a few months ago, gone, wiped out. And it's been replaced by, well, pure panic.
So look, I really need you to pay close attention for the next few minutes. Because what I'm about to show you, the data I'm going to break down, it's either going to save your portfolio, or, and I'm not being dramatic here, it's going to confirm your absolute worst nightmare.
All right, let's get right into it. The carnage. Before we can even think about what's next, we have to understand the sheer scale of what just happened. We've got to quantify the pain. Think about this. In just 24 hours, $2.3 billion. Gone. Wiped out. And this wasn't just regular selling. No. These were traders using borrowed money, leverage, and they all got liquidated, all at once. This wasn't a gentle pullback. This was a violent wave of forced selling that just absolutely crushed the market.
And that massive number, it represents real people. We're talking about over 320,000 individual traders, people who had their accounts completely emptied out, their positions, their hopes for a quick bounce back, all of it just gone in a flash.
And this chart right here, man, it just shows the painful reality for so many people. Maybe you bought near the top at 126 grand. You're down over 50%. Maybe you thought you were getting a deal at 100K. You're still down 36%. Even if you bought at 80 grand, you were deep in the red. The point is, pretty much no one who bought recently was spared. This is the definition of carnage.
So the big question is, how bad is this really? I mean, how does this stack up against the crypto winters of the past? Well, the history here it's pretty sobering. The 2018 bear market, an 83% drop. The 2022 collapse, a 77% drop. Right now, we're only down over 50%, and the selling is just relentless. So you have to ask, are we only halfway through the pain? Yeah, that drop was absolutely terrifying. But what if it wasn't just a random panic sell-off? The data is actually suggesting something else entirely was going on behind the scenes. So let's do a little autopsy here. Let's figure out what Wall Street knew that the rest of us didn't. Yeah, this really wasn't just a bunch of people getting scared and hitting the sell button all at once. The evidence on-chain points to something much more calculated, a methodical exit by the big institutional players. So the real question is, what were they watching? What were the signals they saw while the rest of the world was just glued to the price chart?
Okay, so while most people were just watching the headlines, the big institutions, they were watching 3 very specific hidden signals, and they were all flashing bright red. We're talking about the negative Coinbase premium, the great stablecoin bleed, and the basis trade collapse. Now, these aren't things you see on the news, but if you know how to read the market's plumbing, they were screaming that a collapse was coming. Let's break them down.
So let's start with signal number 1, the negative Coinbase premium. This is so important. Basically, you can think of Coinbase as Wall Street's favorite crypto exchange. So when the Bitcoin price is consistently cheaper there than on other exchanges, well, it means one thing. U.S. institutions are selling, and they are selling hard. And this wasn't just a one-day thing. Look at this timeline. For 21 consecutive days, that's 3 straight weeks, leading right up to the crash, the premium was negative. That is relentless, sustained selling from the biggest players in the game. It was a massive red flag that they were getting out. And this just perfectly sums up the 2 different realities, doesn't it? On one side, you have retail traders, that's probably most of us, buying the dip, right? Hoping for a bounce, seeing every drop as a discount. And on the other side, you have the U.S. institutions. They were reading those signals we just talked about and systematically, day after day, getting out of the market, cashing out before the real carnage even began. So, okay, all of this, it brings us right here to the single most important question for every single person watching this. Where does the Bitcoin price go from here? We are at a massive crossroads. I mean, this is it, right? This is the critical question for your portfolio. Does the Bitcoin price just keep tumbling down into a deep, dark crypto winter, or was this the final brutal shakeout right before the next explosive leg up?
And honestly, the arguments on both sides they're pretty compelling. Let's look at the bear case first. It's terrifying. You've got analysts at Stifel calling for $38,000. Michael Burry, from The Big Short, is warning of a 2022-style collapse. He's reminding everyone that these drawdowns can hit 70, 80%. But on the flip side, the bull case is just as strong. The market is at extreme fear right now, and historically, that is a huge buying signal. Plus, massive liquidations like the one we just saw, they often happen at the exact bottom right before a massive recovery.
Okay, so listen up. These are the numbers you need to be watching like a hawk. These are the critical price levels. First, support at 61,000, well, that's already broken. It's gone. The next big test for the Bitcoin price is $58,000. If that level doesn't hold, all eyes are on the huge psychological level at $50,000. But if that breaks, well, that's when things could get really ugly. The final capitulation target, the one all the bears are watching, is down around $40,000.
So all this data, all this analysis, the bear case, the bull case, it all boils down to one final unavoidable point. It all leads to the choice that you have to make right now.
Look, the next 48 hours are absolutely critical. What happens next could set the stage for the next several months. And for every single investor out there watching their portfolio just shrink, there are really only 3 paths you can take from here.
Okay, path number 1, you panic sell. You cut your losses, you protect what you have left, and you get out before the price potentially falls all the way to 40K. Path number 2, you hold the pain. You just endure the volatility, you stomach the swings, and you bet that a recovery is coming. And then there's path number 3, you buy the blood. You see all this fear not as a risk, but as a generational opportunity to load up on assets at a huge discount.
Now, look, obviously this isn't financial advice, but the data is clear and a choice has to be made. So the final question, it's for you. As you look at your own portfolio, as you look at the state of this market right now, what are you going to do? Are you selling in panic? Are you holding on through the storm? Or are you buying this crash?